Welcome to another video. If you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational company and swing trading full-time with my students. In this video, we will be speaking about risk to reward setting. So if you're developing a strategy, and if you're not, you should, we basically have to understand which is the best risk to reward that is in alignment with the rules of the your strategy, the way in which your strategy actually works. And in this video, we will be speaking exactly about that, how to maximize the profit by combining your risk to reward with your strategy. Which one basically is the best combination of the two? Win rate, adjusting the win rate, is the risk to reward. In this video, you will see exactly how you're supposed to do it. Okay, so this is a very important topic that I want to speak about, risk to reward ratios and how to determine which one is the best for your strategy. It's very important to speak about this. So I brought a table for you and we will now go and analyze that table. But first of all, I want to make one thing extremely clear, and it must be extremely clear. If you do not have the statistics for your strategy, you are not trading, okay? You are gambling, and it's a completely different thing. You need to know, first of all, the rules of your strategy. Second of all, the rules need to be completely clear, okay? You need to know, if a person that reads the rules for the first time, there is no room for a discretionary trading strategy, okay? That simply doesn't work, okay? You need to have clear set of rules that you know the statistics, you know the win rate of your strategy, you know what is the average risk to reward. And keep in mind that about this, there are two main things that I want to speak about. First of all, is your strategy, basically there are two main branches that we need to explain here. The first one is your strategy this risk to reward of your strategy based on structure? Because if it's based on structure, then basically you will have a risk to reward ratio that is variable, like in my case, okay? I have a minimum, okay? We do not take a trade if we don't have at least a 1 to 3 risk to reward, but the risk to reward itself is variable, okay? It can be 1 to 4, 1 to 5, 1.3.5, because it depends from the structure of the market. And other people are trading basically based on a fixed risk to reward. So this is fixed, okay? So for example, what it can be? It can be 1 to 1, 1 to 2, 1 to 3, 1 to 4, and here is variable, okay? Just a quick reminder, make sure you comment below and you let me know which topics you would like me to cover in the next videos. So it can be 1 to, in this case, it can be like 1 to 1.3, 1 to 3.5, 1 to 4.2. It depends from the structure in the market. Here is, okay, I am taking this trade when these rules are satisfied and I'm riding the trade for at least a 1 to 2 risk to reward. My take profit is 1 to 2. Or you can have a trailing stop loss, but again, it depends. So if you're using a fixed risk to reward, there is a clear table that can help you, and it's this one here, okay? If you have let's say a 1 to 1 risk to reward, you run your trades for a 1 to 1 risk to reward, always. Then you need to have a win rate, obviously, that needs to be above 50%, because at 50%, you are break even on the trades, on your strategy. If you have at least a 1 to 2 risk to reward, you only need to be, you can be wrong 67% of the time and you are still in profit. I mean, you are break even, but you didn't lose money, okay? But you were wrong 67% of the time, but you are break even. But if you have at least a 1 to 3 risk to reward, you can be wrong 75% of the time and you're still basically break even, okay? You have been wrong 75% of the time, okay? What that means is that if you take 10 trades and you win 3, you're in profit because it's 70%. It's not 75. I mean that you can win less than 3 trades out of 10 and still be break even and not be losing money. That is the power of it, and that is why with my strategies I always have at least a 1 to 3 risk to reward. Otherwise I can't take the trade. But I don't trade with fixed take profits. Sorry, with fixed risk to rewards. I basically base my trades on structure according to the rules of our strategies, obviously. But this is an extremely important table, both for people that have a variable strategy with a variable risk to reward, and both for also for the ones that have a fixed one. So if here you have a fixed risk to reward strategy, you want to make sure that you have at least a more than 50% win rate, more than 60%, depending on how much is your fixed risk to reward. On the other side, if you have a variable risk to reward, so depending on structure, like I do, then what is your game plan? What you're supposed to be doing? Well, in this particular case, there are two ways. You either develop a strategy that 100% makes sure that you always have above the average. First of all, you calculate the win rate of your strategy, okay? And then you calculate the average risk to reward of your strategy, okay? And if the average risk to reward of your strategy is profitable in comparison with the win rate, then you have a winning system. But if the average risk to reward of your strategy, how can you actually be sure, this is the point, how can you actually be sure that the average risk to reward of your strategy is actually profitable in comparison with the win rate? Because you could easily have some losing periods that could like last an extended period of time with low risk to rewards. And that is where the little trick that I use basically comes into play. You don't take trades if you don't have at least the minimum risk to reward that you have tested that performs the best for your strategy. In my case, I have always a minimum 1 to 3 risk to reward on my trades, and I suggest all of you to do the exact same thing. Do not take a trade if you don't have at least a 1 to 3 risk to reward, because that will assure you that over a big number of trades, you can, you take 100 trades, okay? You take 100 trades. And if you take 100 trades, you can win 30 and you can lose 70 trades, okay? Now, it seems counterintuitive, but you will be in profit. Do the math, okay? If you are right if you're wrong 70% of the time, you will, if let's say you're risking 1% per trade, you will lose 70%. But with the only 30% that you have won, you actually made 90%. So 90 minus 70 is 20. So overall, you are up 20%. You are up in profit 20% and you've been right 30 times out of 100. And that is why it's important that if you have a fixed risk to reward, you know the win rate of your strategy and you relate it to this table that you can screenshot. And if you have a variable risk to reward, you need to have a fixed minimum risk to reward that you're actually willing to take, accept the risk for that position. Otherwise, it's not worth it. Or you have an extremely high win rate strategy. But in general, it's very, very hard to actually have a strategy that has a very high win rate, like 70%, 80% is extremely difficult, specifically if you still have a high risk to reward. But in general, it's something very hard to have, and we have just seen it here, guys. There is no real need to have a high win rate strategy. This is terrible performance. 30 trades, 1 out of 100 is terrible, terrible performance. But you know risk management, you know how trading actually works, and you're still in profit. You're up 20%. Doesn't really get much better than this, okay? So that is basically the best advice that I can give you. Develop a strategy, variable risk to reward, based it on structure. That is basically, I'm giving you my own advice, how I did it. Okay, variable strategy based on structure and obviously a lot of other rules that I can speak about, but based on actual price action, and obviously also use order flow, as you know, but based on the charts, okay? And not just saying, okay, I will take 1-to-1 risk to reward, because it doesn't make any sense. And then determine a minimum risk to reward that you are accept to actually take. If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free education for all of you, as well as going and checking out the mentorship program. It's a very complete program. You first get all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown, showing you how you're supposed to be applying the strategies that you have learned in live market situation, as well as answering every question that you have each and every day. So without further ado, I will invite you to go and check it out, or go and check out the next video.